What is up, everybody? Steve here. I hope you're doing well. I apologize for any background noise. They are out cutting a bunch of trees out here outside of the high rise here in Pelican Bay. But anyway, I want to jump into this article talking about a large real estate company that is in trouble, to say the least. But before we get into it, I did another video on Hertz, the car rental company. It was probably about a year and a half ago. I'm going to link it below because it really gives you inside information as to how these companies transact, what they do in terms of raising money, taking debt, who wins, who loses. It's a really good video to pay attention to and take a look at, because I believe that a lot of companies that are publicly traded are going to go through a lot of the same situations and scenarios. And I think it's important as investors, whether you're investing in, your pension fund, or you're investing in the stock market or your IRA and so forth, that it's important to understand a lot of these companies, their debt positions, and just to really hedge yourself, because I believe that especially coming into this recession, we're going to see more and more companies be in situations like this. We're going to see more and more layoffs. So I just want everybody to protect themselves as much as possible. So let's dive into this. Now, if you guys don't know Wolf Street, it's a fantastic website by Wolf Richard. You guys probably should take a look at it. It's free as well. So if you guys have time, I'll put the link for this article as well so you guys can take a look. Compass Real Estate calls itself the '1 brokerage in the United States and has for years hyped its technology. Now, as a real estate broker, and I've been a real estate broker since '06, real estate agent since 2003, it wasn't too long ago. It was probably about a couple years ago. I've had multiple friends who decided to go with this company, and I was just amazed and shocked in terms of what they were offering these real estate agents in terms of shares of stock of the company. They were also getting basically paid to come on board to their organization. And then also some agents that I know actually they gave a certain amount of money toward a marketing budget as well. So they were getting stock options, they were getting money in their pocket, and they were getting money in an account for them to utilize for marketing their real estate business. So in my mind, I'm like, where the heck is all this money coming from? Let's take a look. It goes on to say, with another huge loss, $101 million this time, bringing the total losses since 2017 to $1.73 billion. CEO Robert Reffkin, during the earnings call, the Fed took repeated actions which has had the direct effect of driving down our revenue. This is the CEO of a major company, a publicly traded real estate firm, basically blaming the Fed for their downfall. It's pretty laughable if you think about it. Reffkin explained during the earnings call, there's still buyer demand and still prices are flat in good markets. They're down to modestly down into the more challenged markets, but there's no longer multi-offers everywhere like we've had before. Days on market are definitely increasing, and so overall, we're still negative on outlook. And now you can see right here, Compass, since their IPO in 2021, it has dropped significantly, down 82%. It's hovering around $4 a share right now. In its startup phase, it raised $1.5 billion from the geniuses over at SoftBank, and then it raised $450 million during its IPO in April 2021. Compass spent the past years going around the U.S. blowing this money by overpaying for real estate brokerages and poaching brokers from other brokerages, promising them oodles of money and stock-based compensation to the moon. It's exactly what I just said. And I think it's difficult for a real estate agent. You're just doing your thing. You're selling real estate day to day, and you got this brokerage that kind of came out of nowhere, basically getting in front of a lot of the top performers in the business. They were attracting real estate agents that were doing a certain volume of real estate. They weren't necessarily going after newbies in any sense. and they're just throwing cash at real estate agents, so it's kind of hard to turn that kind of money down. On May 12th, Compass already announced that it stopped all expansion into new markets and buying other brokerages. In early July, Compass announced it would lay off 10% of its workforce, about 450 employees. Now, if their business model is all about basically buying agents and buying brokerages and growth and spending a lot of money to grow and taking on debt to grow and taking on outside investments and equity investors, eventually when you see a downturn, that all has to come to an end, in my opinion. Market conditions were extremely challenging in Q2, and it announced a new cost reduction program that would cut about $320 million in operating expenses over the 12-month period. And this cost cutting would allow them to generate positive free cash flow in 2023. And now Wolf Richard, he goes on to say, and I think it's comical, he goes, they're going to be a cash flow positive during the 25% downturn after having burned huge piles of cash during the hottest real estate market ever. Yep, I got it. Specifically, we plan to reduce our two biggest areas of expense, technology and incentives to acquire agents, they said during a conference call. So that is what the company was founded on. They were founded on their technology, and they were founded on buying real estate agents, poaching real estate agents, buying real estate brokerages. So it says we plan to reduce our two biggest areas of expense. So if you look at this company, as well as a lot of other companies that are publicly traded, they're just full of expense. They're full of debt. And unfortunately, a lot of these companies are going to go belly up. They're going to show insolvency. That's why it's also important to watch that Hertz video. Again, I'm going to link it for you guys because it really shows you who really wins in these scenarios, and it's not the small guy like you and I. Cutting costs when your business model is growth at all costs is always a peculiar thing, but now as the housing market has turned down and home sales have dropped, it's much harder to make a sale and get the commissions. Cost cutting is doubly peculiar for a growth at all cost company. It is in essence admitting defeat of the business model that it had hyped to investors all along. Compass has a reason to make this desperate move. It reported net cash used in operating activities of $120 million in the first half of 2022. It ended the quarter with $430 million in cash, down from $618 million 6 months ago. So at this rate of a cash burn, you can count on your fingers of how many quarters the company has left before the cash will all be burned. And I think I'm just going to finalize this video with, you gotta be careful where you're investing money, especially with these publicly traded companies. And unfortunately, I think a lot of companies' earnings are going to show a decline, especially with the looming recession on us. I think we're going to see more and more layoffs. I think we're going to see more and more companies go out of business. I think we're going to see more and more companies go bankrupt who are completely insolvent. And the cost of cheap money and the cost of raising money and the cost of cheap debt is a thing of the past. And I don't think that the Fed is going to slow down raising rates anytime soon. So again, watch that other video on Hertz because I think it's very compelling to show what happens when a company goes BK and then starts back up like nothing happened before. Take a look at that video next. And I appreciate you guys being here. Thanks a lot.